So after today's data, we've revised up the full year GDP forecast from 4.8 previously to now 5.2%. So all in all, it's definitely pretty positive for the third quarter. And I think there are a couple of reasons for that. First of all, if you look at the export data over the recent months, there seems to be some stabilization after a contraction in the previous quarters. And I think that's quite supportive to the industrial sector activity. Second is that we also observed some improvements in the infrastructure investments. And I think that followed what the government has been ordering the local governments to speed up the special local government bond issuance, which is very important funding source for the infrastructure projects. So I think that's also explained why we are seeing some recovery momentum. And lastly, I think for consumption, I think we are also seeing some more positive signs, especially if you look at the September data. And I think what we see here is that, first of all, the auto sales has actually been pretty resilient. And I think that's to do with the fact that the government has been offering some stimulus measures and other incentives to encourage NEV purchases. And also, if you look at the services side, the reopening recovery is still picking up pace. And especially if you look at over the summer, there's a lot of traveling demand. And also more recently in the Golden Week holiday as well. And all these things are really helping for us to see a better third quarter GDP here.
Michelle, clearly the property sector has been a serious area of concern for both Chinese authorities and the market. How concerned are you about contagion from Country Garden?
So actually, the news about Country Garden, we've already started to learn about it a couple of months ago. And I think going forward, I won't be surprised if we continue to see more defaults by the property developers. But I think from a macro perspective, what I'm concerned is whether the more defaults that we are seeing would affect the sentiment of household buying the property. For example, if you look at the data of the housing sales that are built already versus the housing sales in advance, we are really seeing a divergence between the two indicators. It seems that the households are still pretty concerned about the ability for developers to complete the projects, and therefore we are seeing better momentum in the housing sales that are built already. So I think going forward, if we see this more property developer distress that are not contained by the government, and I think this is going to still weigh on the buying sentiment of the households.
Michelle, let me just go back to the data that we had. Are there signs that the fiscal support measures and some of the other stabilization measures that were introduced by the authorities are having a tangible impact on the economy, or are we yet to feel the full force of those measures that have been introduced?
I think overall, even though after the July Politburo meeting, the policy announcements have been a bit disappointing compared to market expectations, there have actually been a lot of incremental easing measures announced by the government. And I think altogether, or adding up all these measures, we are now seeing some of it having an impact on the data, which is what I mentioned, such as on the car sales, for example. I think we are seeing pretty strong sales numbers in the recent months, and also in the infrastructure investment, it has started to pick up a little bit more over the last 2 months as well. So I think these have definitely helped to put a floor on the growth.